Oh, good morning, everybody. Welcome to our webinar for September. It's crazy how fast the year is going by, and we appreciate everybody joining us this morning on our monthly webinar that we do. And grateful for everybody joining us and participating today. Of course, like always, this is going to be recorded. The Zoom meeting will be recorded, and then we post it on our website. Lisa puts it on our website every single month, and then we also put it on our YouTube channel. So it gives you the opportunity to review this and look at it in multiple forms and in different areas. So I have a smaller group today, which is fine. Main reason why we do these is to give people the opportunity to attend if they wish to attend and ask questions and stay updated on what's going on with the estate planning world. So Kyoko, thanks for joining us. And if you have questions, you can always type those in, or certainly you can email or call me anytime. Today, what we're going to do is we're going to introduce our newest attorney to Eastman Estate Planning, Darren Richardson. Darren and I have known each other, how long, Darren?
About 9 years.
9 years. We actually worked together at Morris Hall. So I'm going to have Darren introduce himself here real quick so we can get a chance to get to know him a little bit. And then after Darren does his introduction, we have about 3 or 4 questions that we just want to kind of go through that were given to us by clients and questions that are often asked when clients call in. And so we thought we'd address a few of those. It'll be a quick kind of presentation today, get through this maybe in 15, 20 minutes or so, depending on how quick Darren and I can make it through these questions. So Darren, why don't you do a quick introduction of yourself and tell everybody a little about yourself.
All right. Well, appreciate it, Dave. Good morning, everybody. As Dave said, my name is Darren Richardson. I'm the newest addition to the Eastman Estate Planning team. Dave and I go way back. We've been colleagues and friends for the past 9 years. As Dave mentioned, we worked together at Morris Hall together. During my time at Morris Hall, I was the estate administration supervisor and worked many years handling estate administrations exclusively and directing the affairs of the estate administration department, as well as doing estate planning. I hail from Salt Lake City, Utah, Harriman, Utah. Actually, it was a small suburb of Salt Lake City, and now it's one of the fastest growing cities in the state. My wife and I, Melissa, have been married for nearly 20 years now. And we've got 3 kids, 2 boys and a girl, ages 15 down to 9. And just excited to be a part of the team, excited to getting to know our clients here better and making sure that we are addressing all of your estate planning needs. And it's great to be reunited with Dave.
Thanks, Darren. And Darren is primarily going to be in our Scottsdale office. That's kind of the goal, is to have him out in Scottsdale full time. He is in our surprise office right now for a bit until we get him ramped up more in our Scottsdale location. But as you all may know or may not know, we do have 2 office locations. We have one out here in Surprise off of Bell and Reams, and then we have our Scottsdale office location, which is off of Scottsdale Road and Bell out there. So convenient location for all of our clients. So let's jump into a couple of the questions that we've gotten here recently. Number 1 is, should I or can I put another property from another state into my trust? That's a great question. And the quick answer is yes, you can. And more importantly, you should do that. So if we have real estate, we have a cabin up in Utah, or we have beachfront property in San Diego, and we live here in Arizona, your Arizona trust that you created here should hold title to all those properties. You want to make sure your cabin up in Utah is in your trust. You want to make sure your San Diego beachfront property is also in your trust. The one little caveat to that is if we have foreign assets. So let's say we have property up in Canada, or we have beachfront property in Mexico. We don't want to put foreign assets into our United States trust. That can cause some tax issues when we do that. So typically what I tell clients is, if you're in that scenario where we have foreign real estate, then you need to meet with an estate planning attorney in that country and make sure that you develop a way to handle that real estate in that country for when you pass away or when you become incapacitated. And they may have trusts or wills or beneficiary designations that you can utilize to take care of those assets. But any assets in the United States, wherever they're located, yes, you need to put those into your trust. Always remember the main reason why you created your trust is to avoid probate. And if we don't get those assets in Utah and California and Montana and wherever else put into your trust and properly titled into your trust by way of a deed, then when you pass away, then we not only have a probate issue here in Arizona, but we have to open up ancillary probates in all these other states, which then just increase our time and expense and delay and stress and everything else. So yes, very important that we transfer our real estate, in all real estate, into our trust except for foreign real estate. Darren, anything that you wanted to add to that I may have missed?
Yeah, I think the only thing that I'd add, Dave, is depending on how you're using your real estate, you might consider putting a piece of property in an LLC. If you've got a rental property or if you've got an Airbnb, a long-term rental or things like that, you might consider an LLC for asset protection purposes. But generally speaking, if you're using the residence as a second home, your primary residence, you definitely want to make sure that it's titled in the name of the trust to avoid probate. To Dave's point, not only in Arizona, but in any other state where that property might be located. That's
a great point that Darren brings up, because a lot of you may have rental properties, Airbnbs, like Darren said now. And so for asset protection purposes, always remember your revocable living trust does not offer asset protection. So it's not an asset protection vehicle, it's a probate avoidance vehicle. And so if you want a layer of asset protection in case there's a lawsuit, then the best way to do that is through the use of business entities. And LLC is usually the typical one that's used. And if you do that, just remember that the LLC itself should be owned by the trust. So the member or owner of your LLC would be the trust, and then you take your property and put that in the LLC. And so that's how it's all kind of tied together into the trust. So good point, Darren. All right, question number 2 that we're going to go through today is, what is the annual gift tax exclusion? This is a great question because of what just happened this week on Monday. Give you a little history here. In 2017, President Trump passed tax reform, and when he passed that tax reform, it was a pretty substantial change to estate taxes and capital gains tax rates and income tax rates and all those things. And Monday, the Democrats met, and as you probably all know, we're trying to pass this infrastructure bill. It's going to cost trillions of dollars to do. And in order to pay for that, they need to come up with the taxes to take care of it. And so Democrats met on Monday. It's now in the Ways and Means Committee. They're looking at this, but what Democrats want to do is change a lot of the tax reform that Trump passed in 2017. One of the things that Trump did in 2017 is he doubled our federal estate tax exemption amount. And so today in 2021, that number is $11.7 million per person. That just means that every one of us that's a US citizen gets to have $11.7 million to our name before we owe $1 of federal estate tax when we die. It's the highest it's ever been as far as the exemption goes. And that, when it was passed in 2017, it was set to sunset at the end of 2025, meaning it would revert back to what the law was prior to the Trump tax reform in 2017, which was $5 million indexed for inflation. Well, what the Democrats were talking about on Monday and what they're trying to get passed and pushed through is to accelerate when the Trump tax reform sunsets. And so instead of it sunsetting at the end of 2025, they want it to sunset at the end of this year. So that gives us a few months to do some planning if they get this passed, because your exemption will go from 11.7, where it is right now, to a $5 million exemption. And so you're going to lose out on a bunch of exemption there, $6 million, if you don't take advantage of it now. So either use it or lose it, is basically what you're at. So if we have larger estates, you know, that are going to exceed that $5 million exemption amounts, then we might want to do some planning now, gifting some assets out of the estate to utilize our higher exemption right now. So that might be something to look into. But going back to the annual gift tax exclusion amount, right now it's $15,000 per person. So we can give $15,000 to as many people as we want, and there's no gift tax return that has to be filed. And then everything we gift over $15,000 in any given year, then we have to file a gift tax return. It's called a 709. And basically what that does is then the IRS just keeps track of that, and they subtract the amount over 15,000 from our lifetime amount, which right now is the 11.7. So it's right now it's a good planning opportunity if indeed Congress changes that sunset date from 2025 to 2020 at the end of 2021, and trying to get more of your estate out from taxes before they change that. Darren, anything that you wanted to add to that?
Yeah, the only thing that I would add to that, Dave, is just making sure that everybody understands and realizes that there's two different things when Congress acts that's involved. It's the date of enactment, and then the date that certain changes come into play. So if Congress decides that they want to pass this bill, we don't know exactly when they could pass it. So they could pass it in October, they could pass it in November, but the effective date for the exclusion to drop may not happen until January 1, 2022. But the ability to plan for that happens when that bill is enacted in many cases. So if you are looking to gift out of your estate to save and take advantage of the current exclusion, don't wait until December 21st or 22nd to try to get that done. If this bill passes in October or November, then you need to be proactive and make those changes, get in to talk with Dave, get in to talk with me before then to try to get these changes in place before this bill gets enacted. That way we're grandfathering in whatever changes occur.
That's a great point. I actually just met with a client yesterday, and this exact situation was brought up that Darren just brought up. You know, I said, believe it or not, we attorneys do take vacations. We're not here all the time, which I think a lot of people think we're just sitting here nonstop. But we do take Christmas vacations. We take Thanksgiving vacations. We see our family every once in a while. And so what I was telling this client is, don't wait until mid-December to do this type of planning, because people are out of town, financial advisors are out of town, we're trying to transfer assets and get stuff done. Don't wait till the last hour, because more likely than not, it won't get done. So that's a good point that Darren brings up. So thank you, Darren. All right, so our next question, I'm going to let Darren take.
Okay, so the next question is, when my spouse or I die, what are the first 3 steps that should be taken with the trust? This is something that we deal with on almost a daily basis. And I think the first important step for everybody to understand and realize is to don't panic. Don't panic. Take the time to grieve with your family. Take the time to spend your time dealing with family matters, because this is a situation that nobody is expecting. Even if we see a family member or a loved one with declining health, when the day that person passes away, it sends our entire world into a spin. So there's nothing in the law, there's nothing in a will, a trust, or anything that says the day that my loved one passes away, I have to make sure that I take care of all the legal affairs, all the legal matters that day or a couple of days thereafter. So if you have a loved one who's passed away, just take the time to grieve with family, take the time to let the dust settle to the extent that it's possible in such a situation, and really allow yourself to go through some emotional grieving before you do anything. Once you've allowed yourself to do that, and you're in a little bit better of a place emotionally and mentally, then step 2 would be to give us a call. Dave and I handle estate planning and estate administration exclusively. We deal with this on a daily basis. We've been doing it for many, many years. And the reason why we want you to call us is because unless you are dealing with a will and a trust, or you've been a personal representative, you've been a trustee many times over, or it's something that you're doing as a career, chances are you're not going to know where the first place to start is. So you call us, we will schedule a consultation with you. We'll bring you into the office, or we can schedule a Zoom call depending on where you are. And we want to take a look at the estate plan. We want to take a look at the trust. We want to take a look at the will. And we also want to make sure that we take a look at all of the assets. So we see a broad framework of everything that's going on in the estate. And then we can point you in the right direction on how things need to flow through the administration. So I think sometimes people feel that they need to administer an estate as quickly as possible. One thing that I want everybody to remember is that administering an estate isn't a sprint. You can take your time. It is a marathon. The important thing is to make sure that it's done correctly and that all the provisions in the estate plan as well as state law are being followed. And I would say the third thing, which kind of really dovetails into the second point, is to really make sure you're gathering all of the information necessary to administer the estate properly. So identifying what the assets are, making sure that we've got control of those assets, collecting any tax returns for the last 3 years to make sure that those tax returns can be reviewed, because sometimes there's information on those tax returns that maybe mom or dad or husband or wife didn't have in the filing cabinet that can show up on that tax return that's going to be helpful when it comes to the administration, as well as providing and gathering all the current statements for the assets. So bank account, savings account, brokerage accounts, IRAs, life insurance policies, all of that information, trying to gather the most recent version of those policies and those statements is going to be beneficial, because it allows us to identify how those assets are titled, what the value of those assets are, as well as who any potential beneficiaries are under those contracts or policies. So I think those 3 things, Dave, would be the most important considerations for individuals when a loved one passes away. And then clearly, once we've done those things, then there are more responsibilities. But really, just don't panic, give us a call and make sure we've gathered all that important information. Anything that you want to add to that, Dave?
No, that was a great summary. Always remember that we don't charge for consultations. We never have charged for consultations, as Darren said. So don't ever hesitate to reach out to us. Tell your successor trustee now, before you're incapacitated or before you pass away, that, hey, you can call Dave and Darren anytime. They're going to sit down with you. They're going to go through the trust with you, explain it to you. There's no fee or cost to go through that. Certainly, if they decide to hire our services to help them do their job as trustee, then the others will be involved with that. But that will be up to them to decide if they want to use our services or not. But to come in for that free consultation and take advantage of that, that's what I just advocate. So
absolutely.
All right. Our last question we're going to cover today is, and Darren and I will tag team this a little bit, but why does every change I need to have done with my trust require I be in person, even small percentages or change of a beneficiary in my estate plan? It's a great question. We get this a lot. A lot of times people will call in and just say, hey, Dave, I want to tweak this 1% in my trust. I want to remove this one kid. I want to alter this or change that. Can I just do this over the phone? Can I just email you the change and you can update the document and I'll come in and sign it? I get it. I understand it. You know, you want it to be quick. You want it to be fast. You want it to just be done as quickly as possible and come in and just sign the document. There are some ethical issues that we as attorney, I know ethics and attorneys, they don't go together all the time, but yes, we do have some ethics. There's some ethical issues that we always have to be mindful of as estate planning attorneys. Believe it or not, the #1 litigated area of the law right now is estate planning. So we as estate planning attorneys are super, super cautious of being litigated later on, like malpractice lawsuits or state bar complaints or things like that that may pop up. And one way that we protect ourselves from those kinds of things is making sure that we dot every I, cross every T. And what I mean by dotting every I and crossing every T when it comes to this question is making sure that you're sitting in front of us eyeball to eyeball to ensure that certain things are not happening, such as undue influence, right? If you're on the phone, I have no way to know if your son Charlie is sitting next to you, putting a knife in your side saying, tell him right now, do you want to increase my share or I'm going to chop your fingers off. That's an extreme example, but you understand the issue there with undue influence or coercion, or not knowing if you have capacity. It's a lot easier to know that you have capacity when you're sitting in front of me and I can see your eyes, and we have that glazed look that some leaders of our country might have when you watch them on TV now, or do you have capacity? And so that's another issue that we're always looking for. The last thing we want is after we've made this change and you've passed away, the kids or somebody to come in and say, hey, they didn't have capacity when they signed this document, or my sister was living with them at the time, and I know that she was threatening not to take mom to the grocery store that day if she didn't make this change. So having you be here in person alleviates a lot of those concerns and makes us feel more comfortable that you know what you're doing, that there's no duress, coercion, undue influence, capacity issues. So it kind of protects us from those things, and it protects your estate plan, your wishes, right? We want to make sure that what you want to have happen is going to happen, and it's not going to be contested and all unwound after you pass away or become incapacitated. And so those are the reasons why. I know it seems silly to you when you call in, you're like, well, I just want to change this one thing. Can I just tell you to do it over the phone? And no, it's a lot better if you do come in person. But we understand with COVID now, there are situations where that can't happen because of COVID. And so at least the very bare minimum we'd like to do a Zoom meeting like this. So at least we can see your face and see who's in the room and have a better idea of what's going on. But ideally, in person is always going to be best, just to protect your estate plan, protect you, and protect us in the future. Darren, anything that you'd like to add?
Dave, I think you hit really good points on that. I think the only thing that I would add to this is I can read this exactly the way the question was presented, but I could also read this another way. This question was, why does every change I need to be done to my trust require me to be in person? I could also read that to say, Dave, if I have a small change that I want to make to my trust, can I just cross out a beneficiary and handwrite in a new beneficiary? Or if I want to change the percentages that my beneficiaries receive, why can't I just do that? That is a big time. Do not do that. I cannot be more clear, cannot be more candid. Do not do that. We all need to remember that part of the reason why we're getting into a estate plan is because it's a plan. We want our plans to function properly. If we're going on a vacation, a lot of times we create a plan because we want to make the most efficient use of our time, make sure we've hit all the important parts of wherever we're going to make sure that we're getting the full benefit of that vacation. When we're creating an estate plan, we want to make it as simple as possible, among other things, for those who we're asking to step into our shoes, to make sure that our decisions are carried out, that our goals and wishes are being honored. And anytime we cross out anything on the document, anytime we add something, I've seen trusts, and Dave, I know you have too, where a client comes in and there are arrows, going up to the top of the page, around in circles and everywhere else. Anytime you put a pen, a pencil, or anything to that document, it calls into question your intent. It calls into question the integrity of your document. To Dave's point, we don't know if you crossed that off and you made that change, or if while you were around the corner, a friend, a neighbor, or a loved one pulled that off of your bookshelf, opened it up and crossed out and made that change to the document itself. So something that can be very, very simple or seem very, very simple can open a can and open it wide open to a whole host of issues if you've become incapacitated or after you've passed away. And in an effort to try to do something quick and simple can be very, very costly, very time consuming, and can put a lot of stress, a lot of pressure on those whom you're asking to step into your shoes to make sure that these wishes are carried out. So that's the only other thing that I would add on that, Dave.
That's a great point. A lot of times, I know the binder's big, there's lots of paper in there, and maybe you're tempted to use that as a sketch pad, but that's not what the purpose of the binder. We don't use that as a sketch pad. We don't, if you want to make a change, what I tell clients is take out a little sticky notepad and just write on there, I want to change this page and I want to alter this and stick it on there. So when you come in, you're not like, I forget what this page is. You got the sticky note, we can go through that. But as Darren said, yeah, very, very important that we don't mark up, write on, alter, change any of that, because once again, it calls into question your capacity. Did you have capacity when you did that? Did you know what you were doing? Did you do it? Did somebody else do it? Were you under duress when you did it? Those are all things that are called into question. And there's estate litigators that Darren and I both know and have dealt with many, many, many times that are just salivating to see that kind of stuff. So don't ever do that. It's going to cost more money than you could possibly have ever imagined your estate plan to cost if you do stuff like that. So it's a good point, Darren. Well, we had about 9 or 10 questions here, but we're going to keep this short so we can post it on our website and our YouTube channel, and without putting everybody to sleep listening to it. But hopefully this was helpful, and we'll do something like this again in later months. Once again, if you ever have questions, concerns, issues, you want to come in and see us, feel free to email us, call us, come in for a consultation. If it's been at least 3 years since you've had your estate plan reviewed, great opportunity to come in and see us. There's more likely than not going to be some substantial changes coming down here in the next little bit. So it'd be a good time to have things reviewed and looked at. As Darren said, don't wait till the last hour to come in. If you call us December 25th and say, hey, why aren't you in the office today to have my estate plan reviewed? We're not going to be in the office on Christmas Day. We're out. So just be mindful of that. Appreciate everybody. Thanks everybody. And look forward to seeing you next month for another webinar. Stay safe.
So long. Take care.